Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil markets.
Paris Rapeseed. I said, a month ago, how it was sometimes a sheer joy to write commentaries here because of the beauty of the patterns. Well, it continues to be so here. There are still two key patterns here. The first and larger one is the February 2021 to July 2022 ascending broadening wedge pattern. You can see a small part of the lower trend line highlighted in blue in the top left of my daily chart, disappearing rapidly. To be honest, it is a large pattern, but it is slowly exiting my daily chart's time range. This was not a perfect pattern, but it had been the main market driver higher in the early part of 2022. The break lower in July last year left the following incredible targets on the downside, which I highlighted at the time. The primary target X is in the 352 even area with a harder to reach secondary target X1 in the 217 even area. These are obviously, pretty much way out there targets that you can put into your diary on the back page and maybe look at maybe once a year. However, there was, and still is, a newer, smaller pattern, though it is still quite big on this daily chart. It is the early July to late October 2022 bearish Andrews pitchfork. And this is where the joy comes in. The market has since October last year moved down within this bearish pitchfork, mainly as it is now in between the middle tine below, currently at 442, and the upper tine above, currently 512. You can clearly see the tines highlighted in purple on my daily chart. I thought back when I drew this one that it might eventually need finessing or even turning into a shallower bearish shift pitchfork, both of which would have been happy to do in a heartbeat. But so far it's not needed any surgery and is still excellent in showing the bearish angle of attack of this market. The only new feature was the dip in recovery in mid-March below the middle tine. Now, with the recovery, there is an argument with the gaps this dip created below the market for the action for over those two sessions to be seen as an island bottom. This ties in with what has subsequently happened, a rise up over the middle tine, plus the congestion between 438, 446 and 460 and 469. Yet this week, the next resistance congestion between 491 to 505 managed to cap the rise, and we've dropped rapidly down through the 460, 469 congestion. And we're back down to the middle tine, which is now in the middle of the 438 to 446 support congestion. This move lower has been rapid enough to create a possible weekly key reversal for this market. Thus, if we close tonight, as this market is actually closed on Good Friday, so if we close tonight either over 471 or under 458, then we'll be on. Anything in between will create the lesser outside weak. And right now we are just looking at a possible weekly key reversal down below the congestion support between 438 to 446. Anyway, below this congestion support between 438 and 446, we enter a fairly free area of supports. But if we look closely below, we can see some old support from two necklines very close together, generated from the November 2019 to February 2020 move at 398 and 400. They are also close to the December 2020 low at 396. This would be the next area of support below the middle tine. Finally, there is again the elephant in the room, which may be becoming the beginning of a herd of elephants. We had a monthly key reversal down in November last year. And whatever you do, please make sure you take that into your calculations or into your thoughts. Winnipeg Canola. This is another daily chart that has previously given me great joy, but things are possibly changing here. If I take you back to late summer last year, I said at the time the following, and I quote, "It became evident since the start of the sideways to slightly lower movement we've seen here since June that there was a shallow bear channel, currently 870.20 to 756.30. And it is this that has been driving the market lower during the summer," end of quote. To emphasize this point, I further added, and I quote, "So, it seems that until that slightly bearish channel breaks or morphs into another pattern, it will continue to show the slightly bearish angle attack of this market," end of quote. Well, as you can see, the bear channel was still there, leading the way lower until 3 weeks ago. To help view it, I've highlighted it in dark blue on my daily chart. Now, before I expand on the break low, let me take you back to the start of this year and another feature that has impinged upon the market recently, I suppose, really. It was the June 2020 to date broken uptrend, which I've still kept highlighted on my daily chart in bright red. Currently it's 841.90. Now, I've deliberately said to date, implying it's still influencing the market, despite it being clearly broken as recent as early March. Okay, so the market, well, I drew a line saying it punched down through this uptrend rather than actually it didn't really punch down through the uptrend. It sort of sauntered down through the uptrend in early March. And for a while, it looked like we might see the bear channel morph into a sideways triangle. Now, I've also embraced the idea of a sideways triangle. I do like the idea of that. And you can see it between the red uptrend and the blue downtrend. I see them both working together with the bear channel. Also being a sideways triangle for break lower and with all the implications that has. Thus, for the sideways triangle, we had a primary target in the 768.5 area and a secondary harder to reach target X1 down in the 688 even area. 4 weeks ago, the market dropped down and reached the primary target, and the move lower looked good at the time to try down to target X1, which seemingly little in the way, apart from the July 2008 high at 710.80. However, a little after piercing this 710.80 support, the market started showing indecisive actions, culminating in an outside day 3 Thursdays ago, with bullish tendencies, if only just. And that was a bullish double. It was also a bullish double. Since then, prices have recovered higher, but only as far as the lower bear channel line. That's currently at 756.30. But here again, the market found it hard to recoup that pattern, the bear channel, that it once was. It also means that I did not retract some of the potential targets below for the bear channel pattern. Thus, the primary target for this move lower out of the bear channel has already been reached in the 726 zone. A secondary harder to reach target X2 is still live lower down below the bottom of my daily chart in the 644.5 zone. Now, one final point, and it's something I've raised now some 13 weeks. 13 weeks ago and 13 weeks since. And on every occasion since, and I quote, there is just the thought of what may be the whole of April to date action. It can be seen as a bottoming action. You see, it can also be seen just as it is a shallow bear channel. Or you might look at it as part of a very large bearish halfway hesitation. It's all still too early on these thoughts, but I think they need to be present when things start to happen eventually. And that's the end of the quote. We are again closer than ever now to looking at this action as a possible very large bearish halfway hesitation. Just keep watching this space. Bursa Malaysia crude palm oil. Back over September and mid-October last year, the market formed a small but effective reverse head and shoulders pattern. It was the break higher over the neckline for this pattern, combined with the break higher over the old neckline of the September 2015 to November 2017 head and shoulders top. It's currently at 39.66, and that's highlighted in bright red on my daily chart. And finally, the break above the short medium moving average, currently at 39.85, that all together caused the move up in early November. He gave potential targets on the upside of a primary target in the 42.45 area and a secondary harder to reach target X1 in the 44.40 area. In late October, prices reached the primary target and we've come close to reaching target X1 as recently as early March. But we've not managed it yet. Not yet. I thought about retiring target X1 more than once, but I'm also cautious, which is why I've kept it on, and I will again, if perhaps, only for a little while longer. You see, every time we've seen that attempt higher, we've also seen the market drop back to the seeming security of the combination of the old neckline, short medium moving average, and the medium moving average. That's currently at 39.82, much as we have seen this week. Now, taking a step back for a moment, We also still have live the mid-August to early November 2022 mildly bearish shift pitchfork, which is highlighted in bright green on my daily chart. The market is at the moment in between the upper tine, which is above, currently at 42.29, and the middle tine, which is below, currently at 35.93. We're also pretty much within spitting distance now of all the moving averages, something that hasn't happened for a long time. It is worth noting that back in early March, the declining long moving average, currently 40.07, helped push prices lower and may be doing the same this week as the long moving averages moves lower. There's one further feature I'd like to discuss. I said last week, and I quote, the action over the whole of March has set up the opportunity for March to become a monthly key reversal. Thus, if we close tomorrow, the 31st of March, either over 41.29 or under 38.06, we'd be on. Last week, it looked very much as if we might have a monthly key reversal down. However, since then, with the rise this week, that's actually last week, the rise this week, we are currently set up for a lesser outside month, end of quote. Well, you can guess that we ended up as a lesser outside month last week, the lesser cousin to the key reversal. So no overwhelming insight there is, I'm afraid, none.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.